What's up guys? Welcome back to InvestingPH. For this week's stock analysis video, we are going to evaluate a well-known retail company in the Philippines, which is Puregold. Now, I'm really excited about this analysis video because of the recent news that Puregold was removed in the large cap MSCI index. Let's see why. Is there fundamentals supporting the removal? So without a minute to waste, let's get going. Before we start, once again, click the like button and subscribe to my channel. Puregold Price Club was incorporated on September 8, 1998 and opened its first Puregold hypermarket store in Mandaluyong City in December of the same year. In 2001, launched its loyalty program, which was eventually renamed as Tindahan ni Aling Puring in 2004. In 2008, Puregold was recognized by a Reader's Digest Asia's as the most trusted brand in supermarket category. To expedite market coverage, a new format called Puregold Junior Supermarket was introduced in the fourth quarter of 2008. By mid-2009, the company gained market leadership, being the second largest hypermarket and supermarket retailer in the Philippines in terms of net sales. By 2010, launched another format called Puregold Extra. In the same year and henceforth, Puregold was recognized by Retail Asia Pacific as one of the top 500 retailers among the 14 economies of the region. Now, even in the midst of the pandemic, Puregold opened a lot of stores. So if you guys didn't know, Puregold holds stakes in SNR. They bought shares on Karela Management Corp, which is the company that owns and operates SNR. I told you this because this is important in valuing this company. Imagine, they have both targeted the entire spectrum of consumers in the Philippines. With all the new stores opened, they now have a total of 460 stores combined. Now let's go in depth to their financials. So we would still be following our checklist for this valuation. For those new to my channel, I advise you to watch my previous stock analysis videos to further understand how I evaluate stocks. And since this is our 6th analysis video, I would be adding one more valuation method in our checklist. So let's go. First is their net income statement. We can see their net income is at a steady increase except for the year of 2017, which is a slight decrease in growth. Even with that, ever since 2016, their annual average growth rate in their net income is at 10.15%, so pretty good. And you can see even in the midst of the pandemic, its net income has grown for 19.11%, really great. So this is a check in our list. Next up, we go to their total equity. So total equity is important because this let us know that the company's assets is more than their liabilities. With that said, what we want here is a steady growth year after year. Puregold's growth ever since 2016 is at a steady increase. Annual average growth rate stands at 12.26%. Again, even in the pandemic, they had a good equity growth. Another check in our list. So let's go to the return on equity. ROE is an important tool because this isn't influenced by the price of the stock. ROE is computed by net income divided by total equity. For Puregold's 5-year average, it sits around 12.35%. Not quite there, though it's quite a good number. But what we want here is for ROE's 5-year average to be above 15%. So again, always be careful in looking at ROE. Companies' growth in ROE can be influenced by a large amount of debt because when equity falls, ROE goes up in value. To check if this company doesn't rely on too much debt, we go on to our next valuation, which is the debt to equity ratio. So we can compute this by total liabilities divided by total equity. What we want here is to have a value of less than 2. So we follow this criteria. For Puregold, they have a debt to equity ratio of 0.92, really low. Now we can assume that their ROE isn't reliant on too much debt because they really have a low debt to equity ratio. So this is a check for our checklist. Next, we go to their free cash flow. Again, free cash flow is cash from operations minus capital expenditures. So I filled up the missing lines again. Their free cash flow's growth fluctuates rapidly in some years, especially in 2017, which had a massive growth. Now this is due to their negative free cash on hand in 2016. With this, I think this is still a check even with the negative growth in 2018, especially now they had a slight increase in cash on hand even in this pandemic. With this, we go back again to the balance sheet for their long-term debt. Now we divide their long-term debt to their free cash on hand. For Puregold, it's 1.03. To understand this, Puregold can pay off their long-term debt with their free cash on hand in just 1.03 years. This is really good. What we want here is to have it below 3 years. So this is another check for our list. Now in the balance sheet again, I would like to add one more valuation to our checklist, which is the current ratio. Now this ratio I will explain for you guys to understand well. So this might take a while, so bear with me. With this ratio, we would be able to see if the company is handling their short-term obligations or their short-term debt well. To understand this better, with the name itself, current. So for current assets, these are assets they can liquidate immediately within a year. And likewise, in the current liabilities, these are liabilities, debts, accounts payable that are due within a year. This is really simple to calculate. It's just current assets divided by current liabilities. So with Puregold, they have a current ratio of 3.47. To understand this well, they have 3.47 peso of current assets for every 1 peso of current liabilities. We can say Puregold can really cover up their short-term obligations very well. So this is a check for us because what we want for current ratio is to be between 1 and 2. Wait, you may be wondering, why 1 to 2? What about this case of Puregold having a 3 current ratio? Well, 1 to 2 is the standard for current ratio because too high of a current ratio is not always a good thing. Yes, they can pay up their short term so easily, but the thing is, too much of everything can sometimes be a bad thing. The company may not be investing their money well, just sitting in a bunch of cash instead of expanding their business, giving dividends to shareholders, etc. So you understand? But why did I check on Puregold? Well, that's why I put current ratio after we have looked through their net income growth, equity growth, ROE growth, and everything. We can see Puregold is growing at a good pace. We can see even though they have a large amount of current assets that they hold, they are not just sitting there doing nothing. They are investing their assets well to grow the company while still being conservative and protective against debt. With that, you understand? So it's the story of the current ratio you should look out to when the ratio falls out of the 1 to 2 standard. Now we can really see Puregold is handling debt well. They cover up their short-term and long-term debt really good, and their debt-to-equity ratio is at a good number. So with that, we go on to our next checklist, which is the PE ratio. Their PE ratio now is 12.17. Again, we want less than 15. So this is a check for us. Next is their dividends. If you are a dividend investor, Pgold doesn't much give off a huge amount of dividends. They skipped dividends in 2020. Though I'm not going to invest in Puregold for their dividends, I just want to show you guys this. Now we go to their MOAT. So what makes Puregold sturdy against its competitors? Well, one is their brand and service. Like I told you a while ago, they have targeted the whole spectrum of consumers in the Philippines, both high-end and low-end. And with their strong financial statements, both net income, equity, and free cash flow are going by more than a 10% a year. And they really are handling debt well. With this, they have a brand moat and a financial moat. So this is definitely a huge check for our checklist. Next is their company's leader. Their chairman is Lucio L. Co. Mr. Co is the chairman of Costco Capital Incorporated, Puregold Price Club Incorporated, and the Da Vinci Capital Holdings Incorporated, and director of Philippine Bank of Communications, which is all publicly listed companies. He's also the chairman of a lot of companies, so I wouldn't be mentioning all of those things for you guys, so just read it. He has been an entrepreneur for the past 40 years and has received the following distinguished awards. With that, we see that he handles a lot of companies, and he also has a lot of recognition and awards. With this, I think he is a great leader, and the company's growth is a testimony for that. So this is a check for our list. Next is our buy below price. For Puregold, my intrinsic value computation is 70.1. I put in a 30% margin of safety, at which our buy below price is at 49.09. Right now, Puregold's price is at 35.20. So this is a check for us. With that, Puregold almost scored a perfect score in our checklist, scoring 11 out of 12. Really have a good financial statements. I just want to discuss what I said earlier in this video. You can see even though Puregold was removed in the large cap MSCI index, their fundamentals is strong. Imagine they even have a positive growth in this pandemic. So how come the price and the fundamentals of the company is at the opposite direction? Well, crazy things really happen in the market. News really affect prices too much. Now, if you want to understand more about indexes, I have a video about it. You can click on the link above. With this, you can see indexes aren't looking at fundamentals of the company. So investors out there who panics too much about announcements of indexes, please study first the company you are investing. Puregold is a testimony for that. Its price is going lower even though its fundamentals are really great. So I think that's about it for this video. So comment down below guys if you have any comments and suggestions for me. And also do comment down below if I have missed some details about Puregold. So again, see you in my next videos.